Thanks for joining us. My name is Ibrahim. Sani. We're looking at some of the movements from the market, but more importantly, the interest rate possibility of a hike or maintaining. The MPC is meeting early May after Raya, and there's a lot of eyes on this particular one, particularly when we look at how Bank Negara and the government, for that matter, is looking at managing inflation and much more on that notion. Joining us on the line is Wong Wai Ken, the country manager of StashWay Malaysia. How are you, Ken?
I'm good, Ibrahim.
What would be some of your expectations when it comes to the OPR interest rate? Do you think that, based on your internal house view, will it be a hike or will it be a maintaining of this particular meeting?
Yeah, I think the Bank Negara will maintain our rates as it stands. I think our inflation is not as severe as it is in the US. We expect the Fed, on the other hand, to maybe raise rates another 25 bips because things have stabilized on the banking sector over there, while inflation is still higher than they'd like. So I expect Bank Negara to maintain the rates while the Fed to up it by another 25 bips.
Ringgit has been sliding against major currencies, particularly that of dollar. Does that worry you when it comes to trying to find greater yield from investments domestically?
We're only really exposed to ringgit in terms of our cash management side. So StashAway Simple is denominated in ringgit, whereas our general investing portfolios are a basket of global currencies, mostly US dollar. So there's a lot of talk about de-dollarization and a lot of posturing there. So as you can see, US dollar strength is still very much a real thing, and de-dollarization is very much a ways away, I think.
One notion that I want to explore with you, and I apologize beforehand because I didn't cover this topic of discussion prior to our interview this morning, is the idea of the finance minister / prime minister making a statement in the parliament a few weeks ago saying that there could be a creation, or he's open to the idea of a creation of an Asian monetary fund. In fact, to quote him, he says that there is no reason why the dollar needs to be pegged towards or needs to be looking at the US as a way of settlement. Renminbi could be a way forward. Other currencies within the transacting countries could be the way forward. These kind of statements, what would be some of the ideas that you can share with us when it comes to Malaysia looking away from, say, the US dollar?
Yeah, I think it aligns to our house view that there will be a bipolar world. There will be power centers that will be shifting away not just in the US. I think China and a few other countries are looking to form blocs to counterbalance the US. Obviously, some of that is driven by geopolitical tension, say Russia and Ukraine, China and US, China and Taiwan. So that's where this is all coming from. But to construct something like this, it will take decades, right? So I think it won't be overnight, and we'll need to see where these economic engines go through, progress, how they power through. There's just so much to unwind. All commodities markets, oil in particular is in US dollars, which is a major export of ours. Although we do trade a lot with China, the dollar is still all powerful.
Yeah, exactly. And the timeline is very important for us to highlight here. It does take decades. However, the tipping point may have been passed in terms of how countries, particularly in ASEAN and Malaysia for that matter, is looking towards. StashAway, for instance, how are you positioning yourself? Are you looking at more ETFs in, say, these trade blocks that you speak of in China and Taiwan and many more, and try to win yourself away from US and European markets?
Yeah, so StashAway's value proposition is always to invest globally, and we actually structure our portfolios in a way where the exposure is balanced between US exposure and global exposure. And we not just look at the US market, but also the global market when it comes to where are the economic regimes residing, right? So as you know, China is cutting rates or US is raising rates. So we can't have a one-size-fits-all approach to our portfolios. As China rises in dominance, the weightage on the international indices will rise, and then we'll reflect that in a portfolio. But what you get as it stands is still a very balanced, very diversified portfolio that is geographically speaking.
Currently, which global markets are you a bit more bullish compared to the rest?
I would say parts of Asia, especially with China reopening and the US in general, That's not because we think a recession may not happen. I think we are already in position in a stagflationary environment. Gold has done particularly well. Short-term bonds have done well. Large tech names have done very well. So we've been in position in this stagflation environment since December, right? So we don't really try and react to things, preempt things over time. We try and react to things as the data tells us. And right now, inflation is still very high, growth is very low, which is why we're in this, we're positioned this way.
Very recently, Bloomberg has published a whole list of countries and the corresponding percentages or likelihood of them going into recession, or at least a technical recession. I've never seen this list quite so long ever before. In fact, many of these countries that are on the list are already looking at a contraction of a GDP for the fourth quarter of last year. Do you feel that this kind of premonition might come through, in the sense that many of these countries are looking at a recession for the second quarter of this year? And what would be some of the preparations that you have from StashAway right now in managing these kind of possibilities of recession across the various global markets?
That's why the markets are poised the way they are. It could go the way it has, steadily going up in terms of the quality names, large cap names doing very well and pulling the market up. Or we could go into a recession, in which case you need to be appropriately protected. I would say our portfolios are already quite diversified and already well positioned. If we go into a recession, we will switch towards more protective assets, things like bonds and gold. Gold has done 8% this year, always has been a key holding in our portfolio. Bonds has been a particular focus this year, especially the short-dated ones, so that we don't take too much volatility on the yield. So I think that's how we would position investors if we were to enter a recession. But the point is to not jump in and out of the markets when there's a recession or in good times. I think people need to be invested throughout, because there's still gains to be made in a recession. You just need to be much more selective, and as a fund manager, we can do that for you. So if we move towards a recession, we will reoptimize our portfolios once again, and then you will be protected.
Still on that notion of investors might be a bit jumpy currently, or suffering some form of anxiety, either mild or severe. Do you feel that is the anxiety is being felt across the different classes of investors, or do you think that retail investors are a little bit more jumpy, say, for instance, compared to institutional investors?
Institutional investors always have a long-term view, right? Like their mandates are different. You know, if you're managing for pension funds, if you're managing for on behalf of clients on their discretionary income, they're one step removed, because it's not their money, and they're professionals and they have decades of training. Retail investors, on the other hand, it's obviously by default, it's very personal, and you've made all the decisions by yourself, so you feel accountable, you feel emotional. But the good thing here is that for those who have good behavior, who have somewhat mastered their emotions, they will be seeing through this. And if you see through this, you continue to look to the long term and dollar cost average, which is the right thing to do. No one saw the Q1 being this volatile, but also no one saw Q1 being this positive as well. So I think even though there's volatility, there's still money to be made. And I'm not saying that you position yourself specifically during specific points in time, but you try and de-risk your entry, so you go in every month, and that way you have less volatility going forward.
Okay, we'll go for one short break before we continue on our examination, not just on the markets, but now on Stashway Malaysia. We'll be right back after these messages. Thanks for staying on with us. I have with me on the line Wong Wai Ken, the StashAway Country Manager for Malaysia. Very recently, StashAway has announced the projected rate for cash flow management portfolio to 4.1% for the Malaysian market. This is, of course, a rather surprising move. 4.1 is a commendable rate. Two questions here, Ken. First of all, why this move? Second, how are you managing the 4.1%? Would this eat up on your cost?
Well, so we're always on the lookout for the best rates to offer clients for our StashAway Simple product, which is meant to manage your idle cash. So it's not really something that would affect our cost because we have basically switched the underlying fund to something that yields a higher return. And it simply means that any investor with us gets to enjoy this new rate. For existing customers, the money you have already invested with us will yield this projected rate of 4.1%. For new investors who start to invest with us will also enjoy the same rate. It's not a promotional rate or anything like that. So it's not only applied to fresh funds or up to a certain amount. There's no minimum to enjoy this rate. And as the younger generation, as the kids say these days, no cap, right? So there's no maximum to this rate as well. So for all those millionaires out there, there's no cap. Also, it means, I suppose, that investors have a better alternative to FDs. FDs, anything with a 4% handle on it would mean 12 to 15 months lock-in, right? And with StashAway Simple, you can invest and withdraw anytime with no lock-ins. So I think it's a very good rate to grow your cash in this environment.
Of course, cash management portfolio is all about liquidity, and currently liquidity is scarce. I'm not just talking about the T20 market, but across the board as well. We're looking at the idea of growing or improving on liquidity across all fund managers as crucial. Does this put, say, for instance, StashAway a little bit more ahead of other fund managers right now, in your opinion?
Well, I hope so. So as I spoke about earlier, we invest globally, and that means we invest in very deep, very liquid markets like the US. And the instruments we use, ETFs, are very liquid, and we only pick the ones which have the largest market cap and largest volume, not just to have liquidity, but also by extension of that, reduce cost for the investors overall. So I think in that sense, we've been set up this way digitally and to opt for low-cost ways to manage people's money intelligently. So I think we're already ready for that kind of liquidity.
The markets that StashAway is operating in, would the challenges be a bit unique from market to market? What would be some of the similarities that you guys are facing right now as a group?
Yeah, well, we operate in Singapore, Malaysia, Thailand, Hong Kong, and Dubai. And while they are all different markets from a cultural perspective, say if you visited these countries, they'll be quite different. From a financial markets point of view, they still face the same inefficiency to a large extent compared to which is similar to Malaysia. So they still face very high costs from the unit trust side. They still face lack of truly digital and truly convenient services from their banks. And also at the same time, a lot of the products that they get offered are quite generic and not really tailored to them. And it all comes at a very high cost as well. So in that sense, it's all very similar. In terms of the retail investor and their behavior, I think we see a different way of how they are receptive to marketing, for example. Malaysia and Singapore, being urban centers, are quite similar, but we see very unique behavior in Dubai, where there's a little bit more emphasis on high net worth investors. With Thailand, it's very hyper local, so you need a lot of very localized marketing with a lot of different influencers and different key opinion leaders. And with Hong Kong, it's a bit of a balance, right? So you have investors who are slightly older, a little bit more disposable income. Operating in a very, very competitive landscape, but we're doing quite well in all those markets.
Before the break, we were talking about there's a possibility of a retail customer anxiety happening across the globe. Would you care to elaborate more on markets to markets when it comes to this? Is that currently being seen by the markets that StashAway is operating in right now?
Yeah, we're seeing a bit of paralysis when it comes to investors. I think even though our portfolios are up between 2.8 to 6.5% in Q1 alone, which is quite commendable, around 4.5% on 1 quarter on average, it was very, very volatile, right? In January, there was a huge rally because I think people thought that the focus would shift more towards growth as opposed to inflation. And then in February, there was, when those inflation fears were still true, they reversed a lot of those gains. And then to make things worse, you started seeing this dominoes fall in terms of the regional banks, right? So Silvergate, SVB, then obviously Credit Suisse. So equities, then took a hit, but then in the tail end of March, things stabilized. The banking crisis was not systemic. It stopped at Credit Suisse, and then bonds made a comeback, and then large tech names also made a comeback. So it has been very volatile. We've been seeing this across the board, and that's why we think the emphasis on StashAway Simple is very timely right now, right? I think people want a good place to put their cash where it can still grow, and StashAway Simple yielding 4.1%, I think is actually a really good deal given the liquidity as well. So no matter what your appetite is, whether you're risk on or risk off or balanced, right, there's something for you.
Okay, one more short break before we continue on our conversation with Stashway Malaysia. Thanks for staying on with us. I have with me Wong Wai Ken of StashAway Malaysia. Ken, let's look at domestically. There's a lot of happenings right now in Malaysia, a lot of conversations from, say, for instance, the increment of retirement age possibility. That's a topic of discussion. There's a lot of legislation that is currently being or might be tabled in the parliament when it comes to parliamentary reform, legal reform, and many more. But the most, I guess, anticipated move right now is on the local or state elections that are currently that might take place right after Raya. Would these kind of developments create some sort of a anxiety across the markets, domestically speaking? And how would StashAway view these kind of developments or possibility of developments currently happening right now? Is Malaysia's political risk increasing or decreasing in the eyes of investors?
Yeah, I think the average retail investor is facing some fragility when it comes to their everyday earning power and also their long-term prospects when it comes to their retirement readiness. Right? I think all the things you mentioned link back to policy risk, and maybe specifically policy risk when it comes to big funds like ASB or EPF, right? So I think there's also some demand for increased withdrawals from EPF, which I think maybe for a lot of Malaysians already has been exhausted, but there's still demand for it. So I think the government, at least the EPF, when it came up with the loan application for those who are 40 and above, is trying to bridge that gap, right? And I think good policy is only good policy when it's not just executed, but also then if it really helps the people. So I think when it comes to loans collateralized on your EPF account too, people need to be very wary of these kind of tools and to use it for the right reasons, not to use it to to spend today, but maybe rather to offset higher interest debt or to maybe kickstart themselves so that they can earn more given the current environment. And then by the time they retire, they have done something with this loan and then magnify that so they have a retirement, right? We don't want to, we want to survive today, right? But we also can't forget about tomorrow. So I think we're in quite precarious time for the retail investor.
All eyes are also on the cabinet, especially the hot ones, including that of the Ministry of Economy, led by YB Rafizi Ramli, the Finance Ministry, which is led by the Prime Minister himself, and very recently the rebranding of MITI into the Malaysian Investment, Trade and Industry Ministry. That whole idea of adding the word investment into MITI highlights the idea of the government trying to attract more investments. Of course, MITI doesn't just look at international investors coming in through FDIs, but of course domestic direct investments as well. Do you feel that the government is doing or making the right moves when it comes to attracting investors to place their bets domestically here in Malaysia, in our shores? Or do you feel that much more needs to be done when it comes to attracting investors to come in?
Yeah, there's a lot of variables to putting together the package so that MNCs and investors look at Malaysia as a favorable destination. With the PM making his trips all around the world, I think he's trying to head in that direction. But we shouldn't think about Malaysia just as a low-cost center for middle office or back office jobs. We should think of it as also a destination for high-end manufacturing, because we have very stable grid, very cheap energy, But we should also look at human capacity, right? We should upgrade ourselves when it comes to our education system, our TVET skills. All of that really need to come together. So it's the whole package, right? And we don't just lose huge MNCs to Vietnam or to Singapore. I think wanting to do the right thing is very important, and then we need to systematically put in those plug those gaps, right? So we have very good fundamentals, but I think we need to then bring ourselves up the value chain gradually.
Wrapping up the kind of conversations that we've had for the past half an hour, what would be some of the ideas that you can share with us when it comes to investors looking ahead? Do you feel that, and I'm not just talking about Stashway, I'm talking about the investment landscape per se. What would be some of the ideas that you can share with us? Is it the same old idea of, think long-term, dollar cost averaging is still the way forward, don't be jumpy? Or do you feel that there would be one or two more quirks that you feel that you want to share with investors that they need to look out for, at least in the near term?
Yeah, I think the age-old message of dollar cost average and long-term still rings true. That allows you to actually be
that is being tested right now. Now is the time. Yeah. I mean, it's no longer lip service or anything like that. Now is the really to put that idea to test, right?
Yeah, and we had a very rough 2022 as well. So where both bonds and equities were down. So I think that has been tested for the last 12 to 18 months. And I think that that discipline is needed, because in the long term, if you look at markets, they tend to trend up, right? So I think you need to keep the faith and keep investing and having that forced savings set aside. I do think that the things that affect the markets will change. So the narrative to then conclude that long-term investing will change. And it's important for investors to be aware of what's happening out there in the market, right? So I think in terms of Q2, rest of 2023, the two words still ring true, which is data dependent, right? We still need to look at inflation. We still need to look at unemployment, especially in the US, because that ultimately will determine how much more rates would rise and how long they would stay there. What we have now is quite a fragile market rally. It's not a broad-based rally, so there's still need to be cautious. But what the average investor can do is to have good behavior, right? So all those things we talked about, right? Having discipline, dollar cost average, it still rings true. And I think the key to that is having a diversified portfolio, because then you don't have to jump from one potential winner to something overvalued to something that doesn't do well. You can have peace of mind if you have a diversified portfolio. So when you have that towards your long-term goals, and then when your emergency fund and your idle cash is yielding 4.1%, I think ultimately you're in a very good place. Our whole conversation today, there was a lot of uncertainty, and I think people, not just investors, but people should be self-dependent, self-reliant. And if you're earning well and you're investing well, you have destiny in your own hands. And I think that's a lot that that's a lot we can ask for already.
It is still the Raya season, despite all these uncertainties. I see a lot of joy, happiness, jolly people, at least amongst my family members when I celebrate Raya with my family members. How are you celebrating your Raya? Are you enjoying it?
I will be celebrating Raya in KL. I'll be going to open houses with my neighbors and my Malay friends. I think given COVID and all of that, I think we shouldn't take things for granted, and we don't know what the future holds, so we should enjoy the good company and good food while we have it. So at this moment, I'd also like to wish the viewers Selamat Hari Raya.
Thank you very much, Ken. And selamat hari raya to you too. Maaf Zahir dan batin. Banyak aku dah marah StashAway ni. Dia punya interest rate jatuh. But thank you again for taking the time to speak with us. That was Wong Wai Ken joining us online. He is, of course, Stashway Malaysia Country Manager. We have a lot more in store for you. Just head on to AstroAwani.com. There are plenty of conversations like this that can be found there. I am Ibrahim Sani. Catch you in the next one.